There's a perfect storm of events happening right now that could really create a UK housing market crisis. However, in this video, I want to focus on the key things that could potentially impact the market, particularly with the Russian invasion of Ukraine and how that's going to impact what we do. You've probably heard the term that house prices double every 10 years. Well, it isn't exactly every 10 years. Sometimes it can be a little bit less, other times it can be a little bit more. But the general principle is over time, house prices rise exponentially in this particular way. Now, what happened in the last year, in some places, house prices rose by 18%, significantly more than the average expectation in terms of what happens. So what's causing this? Well, there's a number of factors that are causing this. Firstly and primarily, there's just so much more money around in the economy right now. That means people have a higher affordability. So for example, the quantitative easing, i.e. the printing of money, the government support that's been out there, the furloughing, bounce back loans, various other things, grants and other such support that the government provided, there's just a lot of money around. And of course, people haven't been going out to work as they have been in the past, i.e. sitting at home more, working from home more, so they're spending less money as well, and as a result, there's more money sitting in UK bank accounts than there's been at any time in the past for a long time. Of course, when you couple this with a lack of supply of property available for sale in the market, this also has a massive impact as well. There's a limited supply because many people have decided not to sell right now, not to put their property up for sale, particularly during this time over the last couple of years during the pandemic, not putting their property up for sale and kind of holding back. Even some landlords have been holding back and waiting, thinking about the right time to sell their property as well. When you couple that with the very limited available of stock, i.e. property for sale in the marketplace right now, this also is having a massive impact in terms of driving up prices because of poor supply and demand. When there's not enough supply in the marketplace and there's plenty of demand, it's pushing up the prices. So some people haven't just gone to the market, they've just waited, they didn't want to really go on to the market when people are trotting around their property, particularly with everything that's been going on with the pandemic over the last couple of years. And then just this slower stock in the marketplace has also had a massive impact in terms of prices being pushed up really quickly. When a property comes up for sale and there's very few similar ones like that's come up for sale, it sells very quickly. Then this reinforces the idea of somebody else that might be thinking of selling. Well, if you put our property in the market such and such down the road, achieve a certain figure, it's very likely they'll achieve a good price as well. And it becomes self-fulfilling because the prices get driven upwards. And then of course, there's always the overseas investors. There's a huge amount of money that comes from many other countries that gets parked in this country, and a lot of it ends up in property because it's seen as a safe place to keep money. Even though there's been some increase in stamp duty and various things, it hasn't really deterred people massively in terms of bringing money into this country. Unless of course you're a Russian billionaire, which right now may not be the right time to be buying property in the UK. That's what's been happening in the marketplace. But what about right now? What's happening today? Well, of course, inflation is rising very quickly and it's expected before the end of the year, it could be at a 30-year all-time high. That's really not good news. It means things are getting much more expensive. But we have also very low interest rates. Although interest rates have risen very slightly, they're really not much more than what they were pre-COVID times. So the rates are still exceptionally low. That means the cost of money is quite low in terms of purchasing power. But then with rates starting to increase, this is really the only tool that the government have in terms of controlling inflation. As they start to increase interest rates, there's a high risk that actually for some people mortgages become unaffordable. So there's many people, for example, watching this video right now that maybe never experienced anything other than the current low rates. Whereas I remember when we were at university, it's about 30 years ago, and at the time we were trying to work out, what our landlord was probably earning from us. Maybe we should all go and buy a house as students, and we went out looking at property and we looked at the interest rates, and the interest rates are horrendous. They were in excess of 10% at that time, and we can't decide not to. Now, we didn't know any different at that time, but the reality is what was happening is that inflation was a very high point at that time and interest rates were quite high as well. What that meant was at that time, some of the house prices started to fall soon after that because it wasn't a great time to be buying, people were putting off. Or was it actually not a good time to buy? Because when I look back now, some of those properties that were up for sale at the time for like £30,000 are today like about £230,000. So the prices have risen significantly, but that moment in time doesn't feel like the right time to buy. So at the minute also, where we've got interest rates quite low and they start to rise, there might be many people that will decide actually now is no longer the right time to buy property. The market might ease off and even might start falling in prices in certain places as well. But the long-term property is always a good investment. The challenge is finding the right properties in the right location, using the right strategy that you can acquire or control as many of those properties so you can sit through the storm to benefit from the long-term capital growth. Inflationary pressures also have an impact for businesses as well. Generally, it means that they'll not be increasing salaries, and that also means that what happens is people start to struggle because cost of things are increasing. They're spending more money to buy the same things they were before. Just for example, like your energy prices right now are increasing quite significantly, but they're not earning any more money. And when interest rates start to rise as well, coupled with that together, what you find is some people will really start to struggle. But also what that will do is that'll impact house prices. You'll find that fewer people want to actually go out and purchase property because interest rates are rising, affordability is decreasing. The average salary in the UK right now is about £26,000. And when you look at the average house price right now, it's about £270,000. That's more than 10 times the average salary. Now, typically in the past, it's been way less than that. I remember my father telling me when he purchased his first house, the value of that property was about 4 times his annual salary. Today, with things being 10 times the average salary, it's so difficult for people to be able to buy. And as that gap starts to widen, i.e. people can afford less and less, the chances of house prices then starting to ease off and slow down or even fall is significantly higher. Because it comes back to simple supply and demand. If the demand starts to decrease and there's more supply in the market, then the price will start to shift the other way. Hey, if you're enjoying this content, then do me a favor, make sure you hit that like button, but also make sure you subscribe to the channel. It's absolutely free. There's no cost whatsoever by you clicking on that subscribe button. Because the YouTube statistics tells me that many people that watch these videos don't actually subscribe to the channel. I don't know why, I don't understand. In fact, I'd love to understand why maybe you don't subscribe. Pop in the comment section below. But just before you do that, make sure you do subscribe to the channel. Now, I remember when I first got involved in property, at that time, it was just the beginning of the last major recession, kind of credit crunch time. And many of the people I was speaking to about buying property, i.e. sellers directly, when I was marketing directly to sellers, some of the people I was speaking to were in a real financial difficulty at the time. Repossessions were going through the roof, the number of repossessions that were happening at that particular moment in time. During that time, I also learned a huge amount about how mortgages work to help me understand sellers and their particular situation. And what I realized was many people were paying interest rates at 6, 7, 8, even 9% on their mortgage because some prime mortgages were quite rife. Many people, when they took their mortgage out, it was simply a case of sign here. Don't worry about the terms and conditions. Here's your mortgage, 200,000, 300,000, £400,000 even, because that's the way the banks were working at that particular time. And effectively, that's what caused the credit crunch to happen. When it did happen, the whole banking system imploded. But up until that time, some people were paying horrendous rates when it comes to the interest that they were paying. And as I said, repossessions were going through the roof. But what did happen is the government started to reduce the Bank of England base rates, and as they started to decrease, some of those mortgages started to decrease as well, and many people were actually saved from losing their property, because if the rates had stayed where they are and unaffordability had increased the way it had, many more people would have lost their homes. But they didn't, because the Bank of England reduced the base rates, and effectively the lenders then started to reduce their rates as well, as many people had come outside of their fixed period, because some people are still in fixed periods for quite a number of years, paying quite a high rate. But what's the relevance of that today, I hear you ask? Well, the relevance is many people haven't experienced these changes in interest rates. So even now, someone, for example, let's say they've got a £250,000 mortgage and their interest rates increases by 2%. Do you know what impact that would have on their monthly payments? Even if it was an interest-only mortgage, which is highly unlikely, it's very likely to be a repayment, particularly if it's on a home, then the payments will increase by more than £400. Now, if they're already struggling because of other increasing costs, generally speaking, and they've got another £400 a month that they need to find for their mortgage payments, you can see how a lot of people will get into trouble very quickly. Russia's invasion of Ukraine has put pressure on gas prices, which means ultimately at the fuel pumps we're starting to pay more in terms of what we're paying for petrol and diesel each and every week. However, even before Russia's invasion, we started to see the increase in utility prices, in our gas and electricity bills, which is still going to increase significantly. And for some people, this could mean doubling of what they're currently paying. Now, you think about it for a moment. If your gas and electricity bills doubled, then on top of that, your mortgage payments or your rent payments increase significantly. Where's that going to leave you in terms of affordability? Now, you might be very comfortable right now, hopefully you are, but there'll be many people that will really struggle with that. So you can see it's not looking good if all these things happen and they compound. Now I understand there's many levers that affect the property market. I very well know that. But of course, just thinking about these two core factors, how they're going to impact each and everybody individually. When we simply just take this into consideration, you can see there'll be potentially massive change and upheaval happening in the property market. So what you need to do is be aware of the changes that are happening in the marketplace. Now these things are not going to happen overnight. You'll start seeing the patterns of what's happening. The first thing you're doing is you're in the right place watching videos just like this. So as I said earlier, make sure you hit that subscribe button. The other thing you should be doing is coming along to our monthly property meet. We hold a monthly property network meeting, and some months we have a smaller event, other months we have a much larger event, between 50 and 200 people depending on which event that we're actually running. And I encourage you to come along to that, to network, meet other like-minded people, and make sure you're educating yourself on what the right opportunities are right now and how you can benefit. So I talked about earlier when I started my property investing journey, at that time one of the strategies I was using was lease options, and I did probably 30 odd lease option deals over a period of a few short years because the timing was right. And the point I'm trying to make is the right strategies will work at the right time. All strategies are good strategies, but only if they're executed in the right way at the right time. So make sure you're educating yourself. Come along to the monthly property meet. We'll put a link in the description below, but it's really easy to remember. The website is sajhussain.com/networking. If you're enjoying this video and you'd like to get my thoughts on what I think is going to happen to the property market, particularly the buy-to-let investing property market in 2022, then you need to watch this video over here. But just before you go and do that, you can click on my face down here to subscribe to the channel if you haven't already, and I'll meet you over here on this video just now.